Greetings to all Indians living outside India. A warm welcome to you all. Something important is happening on the investment front for NRIs, and in this video I will explain what it is. You may be already familiar with FCNR deposits, foreign currency non-resident deposits. One of the most important attractions of an FCNR deposit is that your deposit remains denominated in foreign currency. For example, if you place a US dollar deposit, both your principal and interest remain in USD. The bank, on the other hand, has to manage the foreign currency risk associated with foreign currency liability, and that is where RBI swap facility announced in June 2026 becomes interesting. Indian banks started offering unusually attractive interest rates on certain tenors of FCNR deposits, taking advantage of the FCNR swap facility offered by Reserve Bank of India. And now there is an important deadline. The Reserve Bank of India has decided its special FCNR swap facility will be available for new mobilization only until 31st August 2026, 1 month earlier than originally announced September 30 deadline. Because the response has been exceptionally strong, and if you are wondering why is RBI willing to help Indian banks offer such attractive interest rates on these deposits, that is what I want to explain in this video. And if this opportunity is relevant to your return expectations and financial requirements, you can consider discussing it with your bank. Let me give you a little background for FCNR swap facility. India is heavily dependent on imported crude oil. More than 85% of India's crude oil requirement is dependent on imports. So when international crude oil prices rise, naturally India's oil import bill rises. And when India has to pay more for imported oil, it needs more foreign exchange. This is one reason why maintaining adequate foreign exchange reserves is important for India. And this brings us to FCNR deposits and RBI swap facility. Now let us look at what RBI itself announced on August 14. By August 13, FCNR deposits mobilized under RBI swap facility had reached 52.3 billion US dollars. That's a huge number, and this is the interesting part. RBI had originally planned to keep FCNR swap facility open until 30 September 2026, but because of the exceptionally strong response, RBI has now brought the mobilization deadline forward by 1 month. The new deadline is August 31, 2026. Now comes the really interesting part. How are Indian banks able to offer such high interest rates? Let me tell you. Suppose an Indian bank attracts 100 million US dollar of FCNR deposits from NRIs. The bank now has a dollar liability. In simple terms, it has borrowed $100 million from its customers and has to repay that amount in dollars when the deposit matures, in addition to the interest amount. So the bank needs to manage the associated foreign currency risk, and normally hedging that currency exposure costs money. That cost is important because it affects the economics of the deposit and play a major role in what interest rate banks offer to NRIs. If the bank has to spend a lot on hedging the currency risk, it becomes more difficult for the bank to offer a very high interest rate to the NRI. This is where RBI has changed the equation. Under special swap facility introduced on June 8th, banks can enter into US dollar swap with RBI against eligible FCNR deposits. The facility covers eligible FCNR deposits with a tenor of 3 to 5 years. 3 to 5 years. In simple term, the RBI swap facility reduces the normal hedging cost burden associated with these deposits, and that gives banks more room for offering attractive interest rates to NRIs. And now you can actually see the impact of this in the rates offered by banks. Take State Bank of India for example. If you compare SBI's earlier US dollar FCNR rates with the rates offered under RBI swap facility, you can see a significant difference. For a deposits of up to US dollar 1 million, the rates shown here go up to 5.75 from 3.05, a jump of nearly 2.7%. So you can actually see how the economics have changed. So this is not simply a case of Indian banks suddenly becoming generous to NRIs. RBI has changed the economics of attracting these dollars. Now let us look at what other banks are actually offering. I have shared the US dollar FCNR rates offered by ICICI Bank, HDFC Bank and Karur Vysya Bank for reference, and you can see that rates vary depending on the bank, deposit amount and the tenure. For example, ICICI Bank and HDFC Bank are offering 6.25% for 3 to 5 year tenors. However, Karur Vysya Bank is offering a 7%. So NRI friend, that is the story behind current FCNR opportunity. If you are considering an FCNR deposit, do not look at the interest rate alone. Check the latest rate, the tenure, the deposit amount, the bank's financial strength, the terms and conditions, and more importantly, the premature withdrawal provisions before making your decision. And please remember, the rates shown in this video are for reference. FCNR rates can change. So please verify the latest rate and terms directly with your bank before placing a deposit. I hope this video helped you understand not just the opportunity but also the economics behind it. Thank you for watching.